Investment has been pretty poor in the UK, really since the financial crisis, but also particularly since Brexit. There is also a serious worry about some of the deals that we just made. Yes, of course, some investment will be coming in, but a lot of investment will also be going out. Are we indeed selling all the family silver?
Donald Trump's visit to the UK has seen a raft of deals unveiled, but is it enough to support the UK's flagging economy? Well, joining me now is Vicky Pryce, Chief Economic Advisor at the Centre for Economics and Business Research. Thank you very much for taking the time for me today, Vicky. So US firms have committed £150 billion, nearly $200 billion in investments in the UK. So what type of deals are we talking about here?
Those are mainly in the AI sector. But they also, look at not just data centers, which quite a lot of people are talking about and investing in, and we had a lot of interest in that for the UK, but also in relation to infrastructure itself, supercomputers. So we've seen Microsoft make a financial commitment to help build the UK's largest supercomputer in partnership with a British AI infrastructure provider called Nscale. So there is an element of British involvement in that as well. So yes, the US firms are coming. They're pledging quite a large sum of money. But first of all, the thing to remember is that it's over a number of years. So we are talking really about possibly over the next 10 years, particularly when you look at Blackstone, the big sort of fund manager and investor. And they are intending to put something like 90 billion of that 150 billion pounds into the UK over the next 10 years. So that's quite substantial. And that could go in all sorts of areas, but mainly in the AI sphere.
OK, so let's pick up then on that Blackstone deal. So like you said, most of the money is coming from Blackstone specifically over the next decade. They say, of course, that will involve some greenfield developments, some new infrastructure being built, but a lot of it might go to buy UK property and companies. Already there is concern that foreign private equity is dominating the UK, driving up property prices or hollowing out businesses to turn them around for a profit. So do you think this deal more strengthens Britain, or is it more like selling the family silver?
Well, the truth is that inward investment is a good thing, generally. I mean, the question is whether some of the companies that are here in the UK and are, if you like, British-born, can survive and expand without having some extra equity injection or even being bought and therefore able to expand. So there is always that dilemma. Do you leave companies as they are if they can't actually raise the capital that they need here in the UK to grow further, or do you allow foreign companies to come in and invest in those areas and help that expansion? But there is no doubt that the worries exist. Where will all the profits go? Are we indeed selling all the family silver? And is it all going to be, at the end, sort of exported in terms of the benefits of all that to a different country? In this particular case, of course, the US. So there is an issue as to whether some of that investment that is coming in will go to the areas which are going to improve the UK's capacity in the sector, particularly in terms of high-tech, AI, quantum computing, and all these other areas that we really would like to see the UK to become a sort of superpower in, or at least that's the language that's being used right now. Or are we going to find that just things get bought up and then exported somewhere else? And there is a big issue in the UK about small firms that start up here in the UK and do reasonably well and then can't actually expand further, and we get those bought up and a lot of the talent disappears with it. And I think that's the concern about the longer term. What do we lose as a result of this in terms of ensuring that there is a sustainable path to growth and prosperity, and also particularly, of course, productivity in the UK?
Okay, I think this is a very good point. So I want to talk about that a little bit more. I mean, on the one hand, you could see all of these investments of the tech giants as, enabling platforms where small businesses could use them. On the other hand, they're also delivery mechanisms for these companies to then start offering the kinds of services that they want to do. So they're preparing the UK market to buy from them in a way. But let's talk about this specifically. So around $42 billion was announced for that tech prosperity deal. So that's the Microsoft, Nvidia, Google kind of deals you're talking about to build things like data centers and supercomputers. But former Deputy Prime Minister Nick Clegg told the BBC that these are merely crumbs from the Silicon Valley table, and he thinks it doesn't solve the issue of UK startups being driven to the US to find investment. So do you agree with him?
Well, he's got a point, but it remains to be seen because, of course, quite a lot of startups would like to start and would like to get the funding. If they don't get it in the UK, they might just fizzle out and not really go anywhere. So there are benefits. The question, of course, is whether the amount of money that will be coming into the UK, and I think that's what former Deputy Prime Minister Nick Clegg was worried about, is significant enough to make a substantial change. And the truth is, if you look at where the UK stands at present in terms of, let's say, AI, in terms of quantum computing, in terms of space, what you find is that the UK ranks quite low, considerably lower than Europe, or at least the big countries in Europe, and certainly way below where the US is. And that's from a survey which the Economist published about where the expertise, if you like, lies. So we haven't quite developed enough of the infrastructure. And there is also a serious worry about some of the deals that we've just made. Yes, of course, some investment will be coming in, but a lot of investment will also be going out. First of all, there is, as part of this agreement, a decision to import more or buy more US products in this sector annually. So that's quite a substantial change. And also, we've seen a move in the other direction because the US is encouraging firms to invest there. On the pharma front, we've seen, in fact, firms deciding to not invest in the UK recently and instead locate in the US. One US firm that decided to move to not do what they were intended to do here, and a UK firm that decided to pull off its own pharma investment. So there is an issue because life sciences were part of what the industrial strategy was meant to be pushing. Of course, advanced manufacturing, AI are also part of this, but the UK has produced an industrial strategy looking at the next few years and where some of the money would go. So there is a worry that, yes, some money will be coming in, but will lots of money also be going out, partly because of what's happening in Trump land, if you like, what's happening in the US.
Yeah, so you're talking about Merck and AstraZeneca, which have paused or cancelled plans to invest in the UK. GSK says they're going to pour billions of investment into the US rather than in the UK. But do you think that these issues are limited to pharma, or does it say something broader about Britain's ability to attract investment outside of all of this Trump visit fanfare?
Well, the worry is that the UK has been trading for quite some time on the fact that it has the expertise, lots of talent, sort of brilliant people who can develop new ideas, and that attracts investment generally. What we've seen certainly since Brexit is that this has become a little bit more difficult. The UK is still considered a reasonable place to invest in, but the attractiveness of the UK hasn't been that great from that point of view because it's more difficult to attract and keep the type of talent that we absolutely need. And I think that's an issue. It's one of those post-Brexit impacts which the UK will find difficult to overcome unless something changes. And of course, the government is trying to have a reset with the EU and maybe things will improve. And there is talent from elsewhere, but it's expensive and difficult to come by. And I think anything that improves the ability to have this talent come in and stay will be very helpful for the UK. If we lose that, and we have lost it up to a point, then we won't benefit significantly in a sustainable way from what's happening right now in terms of inward investment in the UK.
OK, but Vicky, are we just doom and gloom mongers here? The UK growth is still doing all right, especially compared to the likes of Italy or Germany. Germany's doing really, really badly at the moment. But the narrative in the British media is one often of a country that is struggling economically. So how would you describe these pain points in the economy? You know, are we just too much doom and gloom?
There is a certain amount of concern that perhaps we're not going to be going back to any sustainable, reasonable growth for the future. So we may be stuck to 1% if we're lucky, maybe 1.5%. And there are monthly variations in the data. We've seen no growth at all in July, for example, after some improvement in the first half of the year. Even then, we had loads of variations from month to month. It does suggest that businesses are not feeling particularly enamored with anything that's going on right now. There have been tax increases, and we talked about inward investment right now. But if you look at business investment as is, in the UK right now. And remember, a lot of what may be coming in is going to be over a long period of time, and you need for data centers a lot of planning permission and loads of energy support. So we're talking about modular nuclear plants that will be coming into operation to support those data centers. That takes time. Business investment in the UK dropped in the second quarter, and business investment has been pretty poor really since the financial crisis, but also particularly since Brexit, if I can mention Brexit again. And it is a concern that without any serious change, maybe this agreement with the US will change things. Maybe we can be a little bit more confident for the future, but without any real change, especially on the tax front, which has hit lots and lots of companies in all sorts of ways in order to meet some of the spending requirements of the government, particularly on public services, we're not going to see that recovery happening in the way that will benefit the economy at large. Some positive things about some of those investments, by the way, since you want me to be slightly more optimistic, it is that a lot of those that have been announced, and we'll hear more details, of course, in the course of the next few days and weeks and months, are going to happen outside London and in the regions that need it. The regions that have suffered, actually, in terms of manufacturing trade restrictions that have been put by the tariff situation we're finding ourselves in. And those regions have performed slightly worse than London in the last few years. And maybe if they get that extra investment, that would be quite a positive trend. So there are some positiveness reasons for us to be a little bit more cheerful. And maybe those will give us a bit to hang on to. But for the moment, there is concern that we're going to have a budget coming up in November, which is going to be pretty tough. It's going to raise taxes even further. And the expectations are that growth forecasts are going to be possibly revised downwards for the next few years. And that's not going to be a very good basis for anyone to think about investing in the future.
OK, but Vicky, I have to pick you up on one thing, because some would say that the UK's deal with Trump shows a Brexit benefit, that the UK isn't tied with a millstone round its neck to the fate of the EU, which is currently not in as favourable a position as the UK is. So, you know, this is a win for Brexit, isn't it?
You could look at it that way, but it is, first of all, possible that if we had been in the EU, and if we really believe that Sir Keir Starmer, our Prime Minister, is good at negotiating, he might have ensured that there was a better prospect in terms of an agreement with President Trump for the EU as a whole. That's number one. Number two, it makes up a little bit for the trading losses that have come because of Brexit. If you look at our trade intensity in the UK, it's gone down in the last few years, and that's a real problem. And of course, trade is hugely important for growth, hugely important for productivity. The more trade you have, the more productive you tend to be, because anything you export or import gives you the need to be more competitive and beat others. So it may be making up a little bit for it, but in reality, we've got to bear in mind we've all ended up in a worse position than we were in before.
OK, so there are some reasons for optimism, but certainly an uncertain. We can be certain about the uncertainty ahead. Vicky Pryce of the Centre for Economics and Business Research. Thank you very much for that.
Thank you.